All right. Well, this is Andy and Mark. We're just going to fly blind here. We're going into TradeCaddie. We're just going to look around for a trade. This is going to be a paper trade, and just like everything else, this is not a recommendation to buy or sell a security. This is for educational purposes only. And so today, I think, is what, the 24th of April?
25th.
25th, yeah. And we're at the homepage of TradeCaddie. So I'm just going to go ahead and should I just log in here, Mark? I got my Thinkorswim opened up over here. Looks like, yeah, this is, I need to close out of here actually and do the paper trade version of Thinkorswim so that we're not actually trading the real money.
So while Andy's looking that up and getting logged in, one of the things that we're doing is we took our wheel and we spun it around looking for it's a stagnant
It's
to
first
bullish
stagnant,
trend.
yeah. So I was looking. I was actually just kind of going through our education, trying to push everything over to the new platform, and I saw the call calendar in our buddy Scott Islinger's presentation, and I've always been drawn to it just because it's interesting, all the variations. I kind of like the same, putting the same strike price on in both options when you place the trade. But when I was going to do it on my own, I couldn't find anything that I liked for a call calendar. But there's a lot of trades out there that are running stagnant, and so I think that there might be some opportunity. So I thought, let's just go out and take a look at this. So let's go ahead and um, log on into TradeCaddie.
So a good tool for the call calendar. Anytime you think of stagnant, you're going to think of the double eagle light because that's going to go ahead and find your premium cover call. So it's going to look like a cover call. Andy and I, we've done a class on the bull call, which is a poor man's cover call. But this cover call is where you have your long call and your short call in different expirations
Correct.
cycles. So you're going to go out and your expectation is for it to the short call to expire worthless, and you keep issuing these short calls on an existing long call. So you don't make money right away. However, you can make money right away. So
Right. And in
let's
addition to this resource that we are now creating for you that we'll probably end up posting to social media as soon as we're done, um, we have at least two videos that cover the call calendar. One, is if you just go into on-demand education, if you're subscribed to our on-demand, you'll find a 15-minute video on the call calendar, and then in our option chain wizard, there's another one, a shorter video that shows you how to place the trade, kind of a crib note version of the call calendar trade. So, Mark, you want me to head on into the double eagle light?
Yes, sir.
All right, so let me bounce back in there. So again, with the DE Lite, we've got these 5 tabs. This first tab here, we can enter the stock ticker if we were interested in a particular trade, but we are not at this time. Is there anything else you want to cover here before we hit the old search button?
Actually, yeah, it's ironically because the ideal cover call is, call calendar is you don't want it to self-execute right away. You just want it to keep nibbling at this trade, keep making profits over a period of time. You're going to go ahead and set your RE settings. Click on RE settings there,
Okay.
and you're going to say your max RE score is 20, and your minimum RE score is 12. And
Right.
yeah, so you're wanting it to be in the middle. Matter of
Correct.
fact, you might even set it down to 19,
Okay.
and then hit that search button.
All right. And so the two Greeks that we're looking at and that Ari also looks at that are particular to the covered or the call calendar, are they the theta and the delta?
Yes, sir.
Okay, good
Yes,
deal.
sir.
You start to learn these things once you apply yourself, and also through the help of great tools. So All right, so the search results, well, darn it, we only got 500 records. So now, assuming that we've got everything set correctly, you'll notice that the RE score is between, for all these guys, the 12 and the 19, I think. So looks like we pulled it up. Of course, we can sort by any one of these columns here. Is there any particular sorting you would like to take a look at? Right now, we're just sorting by ticker, so you're seeing all the ones that start with A over here. What do you think about these other guys?
Let's go ahead and go for the RE score. So go ahead and click on that.
All right.
And we'll go ahead and work it from left to right. So you got that. Okay, notice you did sort by ticker.
I did.
I mean RE.
Yep.
And you got 19 as your top score.
Right.
Why I've got a. Well, that's good. So let's go ahead and look at your first over on the left-hand side. Your ticker symbol is FI. It's got a max ROI of 183.7%. Now that's an annual amount, and that's saying, hey, that's kind of what we're looking for here. We're not looking for the max ROI in the period, because that would be the ROI if it executed. And we're wanting this to keep feeding us over a period of time. So that's a good looking one. However, yeah, let's go to the next column. You got expiration date. You got May 4th.
So for the first three tickers here, which are the same, Ari's picking three different, or the Double Eagle is picking three different expirations. So from what I understand about the call calendar, and again, this is, you got two different expiration dates, and one is like 3 months out in time, and the other one's like 10 months out in time. I guess that's the general rule that Izzy recommends. Do you find that that's the same recommendation you would would you agree with what Scott's principles are on that?
Right. Well, yeah, absolutely. Scott Scott would go for that April 27 short call down there, because he would want this first short call to be gone, finished, and you back into that trade right away. So
yeah,
that would be the trade he would take. But notice that you're only going to make a 0.56% ROI on that. But again, you're going to go ahead and set that long call farther into the future. So let's go ahead and keep going down to the right.
Sure.
We're going to see that the strike price is $18. That means we're going to short that call at $18. And since we're not doing a cover call, we're not going to be buying that stock. But if you did, you'd be buying it at 18.19. We did a class on these in the money cover calls, so I won't talk about how you're buying a stock for more than what you're agreeing to sell it for. The percent change is what it's done recently. The CC bid price, that's how much money you're going to pick up you're going to get paid 97 cents for this short call. Your profit in this trade is the difference between your short call obligation and your strike price. So you're going to only get paid 78 cents from it, because you've got 19 cents of intrinsic value in there. Your percent call delta, it's only got a 56% chance of success on that. This is okay, because we're not really looking for this trade to go through. However, we do like to see that sentimental score. You notice the RE score next to the right. You got a 19 on the top. That's the RE. And then if you look at your FTS, the first one on the left is fundamental. The middle one is technical, and that right one is sentimental. So now this is where we're going to go ahead and really look in it. Click on that 6.7 there, and let's go to let's go ahead and look at the RE sentimental score, and go ahead and click on search down there at the bottom.
Right. So we've selected the sentimental analysis for the ticker symbol that's pre-filled. So it's just confirming that's what you want. So now that we go ahead and hit search, we get our search results for sentimental score 6.70.
And let's go ahead and click on chart.
Okay. And so we use the free stock charts, which is very handy because it's got annotation and other resources available to us to kind of look a little bit more detail on the technical side of things. So we looked at sentimental, now we're looking at technical.
And now this, you notice that it is definitely in a dip. We're on the way down. And if you were looking at the last alignment of the star signal that you had, you could see that we had a bullish technical on April 9th, but we definitely on the MACD look like we're heading into a bearish one today. And we haven't got confirmation on the other two signals, but it definitely looks like a bearish. We're heading into the bears for the technical analysis. Now let's go back to TradeCaddie on the,
Yeah.
and let's go ahead and on that start date, go ahead and put April 1st for the beginning of the start date.
All right.
And go ahead and click on search.
Okay.
Scroll on. Okay, now we've got a score, and we see our sentimental score is showing for all of April. It's green, and you see April 18th, it was blue, 5.52, and then we have again on April 9th, it was blue again. So I'm only looking at the non-bullish signals, and I only see two non-bullish signals.
Mm-hmm.
But notice that what you see is it went from a very bullish, and a little bit of steam came out of it into April, and then it went back into picked it back up into the nines, then fell back out on the 18th and went back in. And you see this kind of roller coaster. It feels like a dip and then up, then a dip and up. So this feels like it could go back up in the sentimental, just looking at it here.
Yeah.
So let's go ahead and click on that that 19 on the RE score.
Okay.
And go ahead and click on search here.
All right. And this is going to give us all three sentimental, fundamental, and technical scores.
Yes, sir. And let's go ahead and pick the detail on that top one.
Okay.
Now, we did a good job at TradeCaddie to make a very precise, detailed report that tells you everything. If you're afraid that you don't know what market cap is, PE ratio is, PEG ratio, the fundamental analysis, the technical analysis, this is going to explain and give you the definition, give you the guide, and give it all to you here. So for this lesson, we're going to go down to the very, very bottom, and what we're going to do is look at those sentimental scores down at the bottom, and we're going to look at them into the future. So there's Andy and the volume open interest. So you see that open interest for April 27th, that's 2 days from now, is the actual value is 0.2. And look at your guide. It says from 0 to 0.75 is bullish. That means the smaller that number, the more bullish it is. The larger that number, the more bearish it is. So we've got the open interest is the spread traders like Andy and myself, and the volume represents the day traders. You can see for April 27th, the open interest and the volume is bullish for those 2 days. Let's go out to May, see what the next one is.
All right.
For those two. Wow, we have definitely.
Here we go.
We have a definitely contrarian opinion here. A contrarian opinion is where the day traders and the spread traders do not agree. The volume, the day traders are saying for May, it is bearish. And not only is it bearish, it's greatly bearish. So there's something that the day traders are seeing that they do not like. So we would like to know what that is. And I'm betting it's an earnings event. Andy and I are familiar with those. Let's go ahead and go into May 11th. More bears. Let's go into May 18th. Now we're back to bulls. We're on that roller coaster again. Let's go to June. You can June is 0.5. We're now at 1.17 and a 0.72. Notice the day traders, being the volume, 1.17. They're the most negative here. They've consistently are bearish on this, where the spread traders are staying pretty bullish on it. So 0.72 is still in the bulls
Mm-hmm.
for the open interest for June. So let's go ahead and look one more time, the next one down below in for the September,
Mm-hmm.
and we
Oh, you
got
want me to go
back to
okay,
bullish.
I'll go all the way back down to September. So September showing right now open interest for September 21st.
And then while you got January up, I did see that you got open interest, which is interesting for the first time a contrarian moment where the spread traders are bearish
Mm.
on it for the June, and look at the volume, 0.27. The day traders are bullish. So this is a very good trade for this cover call, because you got this up and down roller coaster, and that's what you wanted to see. This is it. This represents what a call calendar would look like. You would want this roller coaster of dips, ups and downs, and this is where we're going to go. This is
Okay.
the trade.
All right.
So good pick, Andy.
All right, let's take a look at that then. We'll go ahead and place this. FEYE, FireEye Inc. And again, like I said in the beginning, we're just, basically just flying blind, just kind of showing, how to do analysis with TradeCaddie. I have no idea what FireEye even is. I mean, I think I've heard of it before, but we don't know. So if we were looking at fundamental score, we would know much more about FireEye, but we haven't talked about it. We've talked about the technical and the sentimental. We know that the fundamental score is right there in the middle too at 6.3, making it stagnant as well. So, yeah, let's go ahead and take a look at the OCW for FEYE and see if it has a call calendar option that makes sense to us. And so, for one of the future features of the OCW, we're going to be able to dynamically adjust um, the strike prices and have everything else also adjust. But for now, the OCW is going to give us what it thinks may or may not be a good trade. So here I scroll down to call calendar, which again, you got your long call as the primary instrument, your short call as the one that limits your risk. And here it says that the call calendar for these two dates, um, 22 days out for the long, 1 day out for the short. And I think that's probably why. It's because we're not far enough out in time, April and May, for the call calendar. So it says this is a bad trade. So obviously, it's a bad trade. Maximum ROI is in the negative. Max reward is $2.08, and risk is so these numbers are not working for us. So, what would you suggest we do in this scenario?
Well, since we got you and I in the floor, we're going to manually do this outside of OCW if you
Right.
want.
Yeah,
So we're
or
going to
just
go
hop
ahead
on
and,
over and do a covered call. Looks like the covered call is actually covered call for this particular trade. It's not working either, but the put calendars got a max ROI of 68%, max reward of uh,
cover
25.
call's
So
working.
yeah,
It's working at 3.86%, 15 days.
yeah.
That's a nice little return right there. Yeah, you want to
Yeah.
do that?
Do you want to do the covered call instead?
Yeah, yeah, we could do that, and uh, let's go ahead and do the cover call.
All right, let's just hop on over to the covered call because the call calendars. This is just a simpler way to do it. Um, we can also do the call calendar. That's fine since we are doing a paper trade. So we're going to be risking $16.85 on this call, which is of course also our cost basis because if you know anything about covered calls, you know how to factor that up. But TradeCaddie also does all the calculations for you. So this is based off a strike price of $17.50 for the short call, and it looks like the stock price right now is $18.19. So knowing that, let's head on over to the covered call, and I'm sorry, head on over to Thinkorswim. Take a look at FireEye, and here we are. So how far out in time did we say we were going to do this? And that would be
May 11th.
May 11th. Thank you. So let's go back to. All right, so we'll go ahead and take a look at the May 11 options chain. And which strike price?
The 1750.
Okay, 1750. Sell at the bid, $1.26. Now we can do the
Covered stock.
where'd it go? Oh, it'd be nice to have these in alphabetical order, wouldn't it? Okay, let's drop this down to the appropriate levels. Hello. There we go. All right, we're just going to do one contract, right?
Yes,
All
sir.
right. So we've got ourselves strike price 1750, expiration of May 11th. So that's not too far out in time at all, is it?
So let's go down to 1685. Let's lower because
yeah,
we're just going to
1688.
match. Yeah, our card says we can get it at 1685.
Okay. All right. Okay. Let's confirm and send this, shall we?
Yes, sir.
All right. So hit the old confirm and send. Verify that this is simulated trading. Simulation, not a trade. And nice little covered call. And you ready to send it?
Yes,
I
sir.
know I am. All right. Very good. So let's go ahead and congratulate ourselves for a well-placed trade. Do we want to fiddle around with a covered call on this call, or do we just want to go ahead and end the call now?
Actually, go to that stock charts, the sharp charts,
Yeah.
and I want to point out that go ahead and change your scale down there to 6 months. You got 6 months, and go ahead and click on annotate.
All right.
And go ahead and draw a horizontal line at 1685 because that's our cost. That's where we make the decision if we made money or not.
Right there.
Right. So I just want to point out, I know we've already placed the trade, queued it up. Look how fantastic Ari was. It went out and found an opportunity where the stock is at $18.19. That's where it closed at. And we're allowed to enter into the stock with a cost basis of 1685. And look at that. It hasn't been down that low since March. It closed out of February. So we're 2 months back at least, and we have an opportunity to make. Yep, that's a great idea, Andy. Yeah. That's where we've only got 20 days in this just to ride this out and see what happens.
Yeah.
So,
well, what we can do is why don't we just go ahead and we'll put this video up, and then somewhere, and then that way we'll go ahead and be able to post updates on how this trade went when we as time progresses.
Right.
All right, cool.
Sounds good.
Awesome, man. Well, Mark, thank you so much again. This has been a lot of fun, and with our other trades, it's also been quite profitable when we actually place real trades. So looking forward to our next one.
Yes, sir. I am too.
All right, buddy.
Thanks, boss. See you later.